Hello, everyone. This is Logan Hertz with Hazeltine LLC. We are continuing our interview series with financial professionals in the industry with a lot more experience and credentials than myself, so we can continue learning. And today we are joined by Mark Ameerali. Mark has 19 years of experience in the insurance and financial services industry. Mostly, he's been specializing in cross-border estate and tax strategies, and by cross-border, we mean Canada and the United States. He is a Canadian citizen currently living in the US and working on getting his US citizenship. And so he has a pretty unique niche and a pretty unique perspective, having lived in two countries, having worked with a lot of high net worth clients, and helping them to navigate estate and tax strategy as well as investment advice across those two countries. So, Mark, great to have you on the program with us. How are you doing today?
Good. Thanks for having me, Logan.
So why don't you start by just giving us your background, your story?
Sure. So I grew up in Canada. I grew up in Vancouver, and I attended school in Vancouver at the University of British Columbia. I went to business school there, studied finance. Came out of school looking to, get my feet wet in the financial world, and ended up as a commercial banker, as a credit analyst, which wasn't a great fit. I found out over the next, several attempts to launch my career that I was much too entrepreneurial to work at a big organization. And I was just looking for different things out of my career than punching a clock and working 9 to 5. So what I ended up doing was I after a position with a non-bank financial institution where I was doing a lot of interesting things that still weren't fulfilling my goals and aspirations and making me happy. I actually left Canada and moved to South Korea to pursue my CFA designation because I'd started that in Canada while I was working at that non-bank financial institution as a trader and portfolio manager assistant. So over in Korea, I spent a lot of time trying to figure out what I wanted to do with my career, with my life, while I was also pursuing this postgraduate designation. And 3 years later, I came back, met my wife over there. And while I was looking to restart my career, I noticed that the strategies that I was using to try to, gain wealth, grow wealth, invest, while they were somewhat successful in trading and public equities exposure, I noticed that there was a great opportunity here in the United States to invest in the housing market, which had recently crashed. So this was shortly after the '08 crash, and I was actively looking to get invested in the United States, and specifically in real estate. And that's what set me kind of on the path to transition from your, we'll say, more standard finance roles in banks and public security trading companies to private investments. And so my first foray into private investing was investing into single family homes in the United States, in areas that were hard hit by the global financial crisis in 2008. And that culminated into a number of purchases and partnerships, and eventually into a fund, which I helped design and deploy funds into the United States from Canada, which is, it's not an easy thing to do, but it's not ridiculously complicated. But it is fairly uncommon for people to be able to get access to that type of asset class. So from there, I actually ended up working primarily in the private equity space and private investments, in what Canada calls the exempt market dealer space. So I worked with an EMD, a brokerage firm, kind of like a broker dealer down here, but specializing in private securities for approximately 10, 11 years. And I've had a lot of success in that role and saw a lot of different opportunities that I helped raise capital for. And then about the time of COVID, I decided that I wanted to get out of Canada and into the United States. And because of my connections in the United States, I was able to make that transition very quickly. And that included a transition from the role that I was in private markets and capital raising into the role that we met while I was engaged with a firm down here, primarily advising clients on making that transition from Canada to the U.S., investing internationally, or doing cross-border business because of my background in building cross-border funds and whatnot. I was able to have a good background in all the tax, legal, immigration issues that come about. So I had a contact that helped me build the fund back in 2013, 2012, that was able to help me transition down here to the United States. And I was working with his firm when I first got here, in helping other people transition and manage and invest across the border. And that kind of brought us to a couple of years ago when we met, Logan. We met through a mutual client that I was helping out, trying to figure out some immigration challenges and investments from Canada into the U.S.
Excellent, excellent. So you wrote a book, am I correct?
Yeah,
Tell us
I've actually
tell us a
written.
little about your book and promote it, and why should people read it?
Sure. So yeah, the book that I most recently wrote was the third book I've written. I wrote the first book in 2013. It's called Common Sense. That book is kind of, I brand it as I think the subtitle is 12 Money Lessons You Should Have Learned in High School. It's kind of a foundational, you should know this before you leave high school about money book, which I taught that curriculum for the better part of 15 years, from 2005 until 2020, at universities and high schools in both Canada and Korea. Second book was called Perfect Sense, which is a little bit more advanced. I call it Advanced Wealth Management Strategies for wealth creation, and it has kind of interesting secrets on like how to buy real estate with no money down and real estate options and whatnot. And then the third book I wrote just last year, and that was a book called Flight to Freedom: From Lockdowns to Liberty. And it was telling the story about my family transitioning from Canada to the United States. It was a fairly dramatic shift. It happened very quickly. We were essentially, after we made the decision, we were gone within 3 weeks. We wanted to cross the border into the United States before the border restrictions changed, which is what set off the trucker rally back in 2022, if people remember that. We saw that coming. We heard that announcement, and we did not want to be stuck in Canada while that was going on. So we made that decision to leave. And fortunately or unfortunately, my wife was 37 weeks pregnant the day that we crossed the border. So there was a big rush to do that before the baby was born, before winter set in, before major floods took place in the part of the country that we were leaving. And then it recounts the story of us migrating from British Columbia down to Texas, reestablishing in Texas, and then for community and religious-based reasons, moving back up to the Pacific Northwest, up here to North Idaho, to be in a community that we found was going to be the best place to raise our, at the time, 5 children. I now have 6 children. And so it tells that story, but importantly for third-party readers, it actually provides quite a bit of advice if someone is looking to make that transition themselves from Canada to the United States. There are several immigration challenges, but more so tax and legal challenges that people don't understand or appreciate until they've got to the point where they think they know what visa they want. The tax implications of leaving Canada permanently or for tax purposes are very complicated, and it helps to have some information behind you if you're considering such a move. And because of my experience both investing cross-border and then transitioning cross-border, and by the nature of the work that I was doing with the firm that I worked with down here when I first moved, I was able to lay that out in a logical fashion so that people understand the challenges they're going to be facing if they're looking to make that transition.
Yeah,
And then also, I should say at the end of the book, it actually does relay that my relationship with the firm that I was with when I came down to the United States spun out into an external consulting role I kind of, again, in the entrepreneurial person that I am, started offering that service as a standalone proprietor. I can do that under my own corporations now. And then also I'm rebuilding my financial picture in the same fashion, but in a different method than I had when I was in Canada. My lifelong goal from a financial standpoint, from my very early years of investing in my teens, was to achieve financial freedom through whatever appropriate means that were available to me. And that started with the trading that I was talking about before, leveraged into the real estate that I mentioned before, which was single families and multifamilies. Went into a business that I owned, my practice and financial advising, and then when I came down to the States, I actually sold a bunch of my assets, and I'm now rebuilding them. And so at the very end of the book, I explained that what I'm trying to do is rebuild everything I had up there in a different fashion in commercial real estate. And the asset class that I have chosen is self-storage. And the reason for that was because when I was in Canada raising capital for that 10 plus years, I was able to get insight into many different business models. And when I came across the self-storage model, I could immediately see why it was so attractive to so many people. And I thought to myself then, which was about 6 years ago now, when I first saw it, that if I were to ever start my own fund, that it would likely be in self-storage for all the reasons that they had started their fund. And so that's exactly what I'm doing now and focusing on. In addition to the consulting, I'm actually building my cash flow up in commercial real estate and self-storage.
Excellent, excellent. Yeah, I'm not an entrepreneur. I don't have a single entrepreneurial bone in my body. I kind of fell into this. I like to say I planned it, and I knew exactly what was going. No, no, I did not plan this at all. I'm definitely not an entrepreneur by nature. So I've kind of had to learn through the school of hard knocks. Unlike you, most of my career I was a W-2 employee, and I was perfectly happy with that. I had no problem with it. But then COVID kind of gave me the push out the door to do something I'd been toying with, which was to start a business doing something that I was passionate about. And of course, when you start a business and you really give it the old college try, at the very least, you learn a tremendous amount about how the world works, how the economy works. You pick up a lot of skills that you wouldn't necessarily pick up, you know, from a full-time job. And I certainly have a
Mhm.
lot of respect for business owners and entrepreneurs because what they do is not easy and they
Yeah.
take a lot of risk to do it and they provide a service, you know, for the rest of us, right? So I certainly
Yeah,
appreciate that.
definitely a mindset shift. And to be honest, I actually felt that in reverse when I moved down to the United States. I became a W-2 employee for about a year and a half. And having not been an employee for, the previous, call it 15 years, I could feel my my mindset shifting. And to be frank, I didn't really like it. I'm designed to be an entrepreneur, and that's my mindset. So I'm very happy with the freedom that I now have to be able to pursue the things that I'm doing.
So given your 19 years of experience doing a lot of really interesting, really cool work in the finance sector, what are some of like the major lessons that you want to share with our audience that you've learned?
Ooh, that's a very broad question. Um, I'll answer it from, we'll say, an investment perspective. So some truths that I hold to in investing. Um, some of them are the basic ones in terms of, like, you don't want to invest in things that you don't understand, right? You want to make sure that you know what you're good at and what you're not good at. I often have this conversation with some of my high earning um, clients, in that they feel like because they make a lot of money in one area that they be good investors as well, and sometimes it is actually truly better to stick to what you are good at and then let other people do what they're good at, and not try to do everything at once. Another truth I would say is that if you're going to go that passive route, you have to understand that you're going to make less money than you would otherwise doing it on your own, right? Because there's always a middleman. There's always someone who's taking a fee or a percentage for doing things for you. There's no free lunch. And if you want the entire pie, you have to do everything, right? You have to originate the strategy on your own. Another thing that is not as common, that it took me a long time to learn, okay, from many different business endeavors, is that you need to give whatever you're pursuing enough time to grow, right? Trying to jump from one thing to the next is going to be, you're always restarting from zero, right? If you believe in the business that you're doing, make sure that you give it that, we'll say 3 to 5 years of pursuing it before, considering that maybe this path won't work out for you. Because in my experience, and I've really learned this a lot more in the last 3 to 5 years of my career, is that every business pursuit or investment endeavor that I've pursued would have been a winner. I mean, when you have, the better part of 20 years of investment experience behind you, you can honestly say, okay, well, if I kept doing that, that would have been a winner, right? And I'm not saying that I didn't hit some wins. I'm just saying that if I had stayed pursuing what I was doing before, it would have been an even bigger winner than it was, right? And that's a very important one. That's not one that you hear people talking about a lot. But if you're constantly starting from zero, you hear that the adage that it takes 5 years, that 5-year hump, if you're starting a business, if you're starting a new service, right? Give yourself that time to pursue that. And that I think is a really valuable piece of advice for people who are looking to do that on your own. If you're not looking to do it on your own, you're going that passive route, the number one thing to keep in mind is trust. Trust is the currency of the investment world, and you need to be investing through someone that you actually trust will have your interests in mind at least as much as theirs, right? Because there are so many people out there who will take advantage of clients that they have no personal connection to. I see it all the time, and quite frankly, dealing with people who are very trusting of me, sometimes, in my opinion, too early on in our relationship. I would often think, if you weren't dealing with me and you were dealing with, I wouldn't say anybody else, but many other players out there, they could take complete advantage of the naivety of the clients and the trust that that's placed in them. And there's a million ways out there that people can pull the wool over your eyes. So trust is very important.
Yeah, one of the things I love about what I do, which is the infinite banking concept, I know you're familiar with it. We've talked about it. I should mention, by the way, Mark is a client of mine. I probably should have brought that up. So thank you, Mark, for your business. Greatly appreciated it. But I don't take people's money. Like, if you do the infinite banking concept, you're not giving me anything. I'm not taking money from you and investing it for you. And that model is fine, but that's not what I'm doing. I'm giving you back control over your capital, right? And so the people who work with me have to be willing to take on that responsibility. They have to want to take control of their capital, which, quite frankly, a lot of people don't want, because with that comes then responsibility. And of course, I'm here to help any way that I can, and I can add value in a lot of different ways. But what I cannot do is do the work for you, right? It's now your capital, your banking system. You decide what to do with it. And I'm here to assist for sure. But I think it also speaks well of you, Mark, that you are an expert in investments and insurance, and yet you became a client of mine, right? You could have done it yourself in theory, right? But I think you understand, as I think all good financial professionals do, that you can't do everything yourself. And it makes sense to partner, right?
Yeah.
I do it too, right? There are lots of things that I could in theory do myself. Like, as an example, I have a health insurance license. And while I don't focus on it, as part of helping clients, I will put disability policies in force. I will put long-term care policies in force. I will put critical illness policies in force. In theory, I could do all that myself, but I don't. I use partners who really are experts in that, who really focus on it, who do things like, hey, Mark, why don't you send me your current disability policy you have with your employer and I'll review it for you? I mean, I can't do that, right? I don't have that level of expertise. Just because I have a health insurance license doesn't mean I can do it all myself, right?
Right.
So I think it
Yeah.
speaks well of you that you see the big picture that way, right?
Yeah, absolutely. So I guess it's worth mentioning that, I mean, I started my career in investment and finance in 2005. I pursued my chartered financial analyst designation after my degree in finance. Then I got my financial planning designation. And the third license or certificate that I got was my insurance license. So in Canada, it took me a while. I actually have an insurance advisor in Canada as well, um, and it took me a while to get my insurance license because I was broadening my service offerings to my clients. But to your point, I did not deal with accident and sickness insurance, long-term care, disability. I didn't really deal with any of that. I got into the insurance world for the estate planning elements of it, for the financial planning elements of it, because it dovetailed with what I was doing. When I moved to the United States, I considered getting licensed, but ultimately decided not to because, again, like you're saying, you can only do so many things, right? Now I've been blessed in that I had many options when I was down here. Like, what did I want to pursue? Did I want to pursue insurance or investments or real estate? And I ultimately decided to focus on the real estate with a side business of consulting people using the knowledge that I gained while I was working with the firm that I came down here to work with. But the majority of my focus is on building the commercial storage route and not the insurance thing. So yeah, I was happy to, especially someone as knowledgeable as yourself, helping me educate, especially on the American side of things. There's a lot of overlap, but there's a lot of things that are different between the two systems. And we spent a lot of time, you know, talking about what those differences were so that I could make informed decisions. And it was just definitely a better decision for me to get someone else to do the insurance piece for me instead of trying to do it myself. Even though I am capable, it didn't make sense for me.
Absolutely, absolutely. And I want to go back to something you talked earlier about longevity. So you're right, because in this business, I'm thinking of one guy I know in the business who's enormously successful. He has his own agency now. He has a lot of agents working for him. He does maybe not exactly the infinite banking concept, but something very similar where they're doing, high cash value, whole life policies. Okay. His first 3 years in the business, total, he made less than $30,000. First 3 years combined, right? If he had quit at that point, he would have had to start over doing something else. But he had the perseverance to stick with it and eventually became tremendously successful. And I think, it's not even perseverance so much as it is longevity. Like there are some things that just cannot be rushed. Building a brand, building your persona, building that level of trust with your clients. You said it. There's no shortcut to building trust. You can't build trust overnight, right? And so it takes multiple years of just building the foundation. And it's easy to give up because, yeah, that first year in the business, I don't care who you are. If you get into this business year one, it's going to be rough. It's going to be tough. I don't care how smart you are, it's going to be tough. But don't think that that means you're a failure just because you didn't succeed, quote unquote, in year one. Nobody, I mean, it happens, but generally speaking, people don't succeed in year one. Not only that, if you look at successful entrepreneurs, usually what you find is that their first business venture actually failed, but they didn't view failure as an end. Like, oh, well, I guess I'm not cut out to be an entrepreneur. Let me go back to being an employee. No, they view failure as a step along the road to success. And then their second or their third business venture is the one that really succeeded, where they took the lessons learned, right? Because you learn a lot more from failure than you do from success, right? This business and any business is a lot more about failure than it is about success, right? Sort of like, I like sports analogies. It's kind of like baseball. In baseball, a 300 batting average is good. So good hitters fail 70% of the time,
Mhm.
right? When you're starting a business, you're going to hear no a lot more than you're going to hear yes. And that's hard.
Mhm. Yeah, and I think one of the things that that people don't really immediately recognize is that your business experience through, we'll say, anything less than extreme success, that knowledge compounds, and generally people stick in a fairly close wheelhouse to what their original business was. So there is carryover from not just the knowledge, but the effort, the reputation that they've built. So, for example, when I started just in public markets and then went to private markets and went private markets to financial planning and then financial planning to insurance, all of this has a carryover, right? Has added value, has momentum, like what you were saying, which is what when I started my insurance, I already had more than a decade of experience in other areas, and this was like a lateral move for me for my clients. So it was easy for them to see me as someone who they could trust with their insurance. Now, to your point about trust and insurance and not taking people's money, like you were saying earlier, that's one of the things that I did love about insurance is that the outcome was not as variable as many of the investments that you see out there, right? You had a certain level of security and certainty for at least at minimum protection of principal and projections of growth in the future, while not guaranteed, are much more stable, we'll say, much more predictable in something like the insurance world versus the real estate world or the public market securities world or the private securities world. So what I loved about that was, it wasn't it wasn't the same level of risk that clients were taking to with the insurance products as it was with other products that I was used to.
Yeah. When I started, I actually really had two businesses. I ran an investment newsletter. And when I first got started, that was really the flagship product, quite frankly. And it was very much alternative investments. I was not securities licensed. I don't want to be securities licensed. And I'm not giving out investment advice. It's just a newsletter. It's information, right? And of course, all the things I'm talking about are not securities anyway, so not an issue. Um, I'm not trying to compete with who have way more experience than me in the stock market. We're looking at assets that are off the beaten path. But then eventually, what I found was that the demand for that really waned, whereas the demand for infinite banking was a lot more constant. And to your point, I think one of the reasons for that is that the outcome is not variable. It's not going up and down, right? It's your safe foundational asset, which, in my opinion, everybody needs to have some kind of a safe foundation to their financial picture, whatever that looks like, right? And then you can invest beyond that. Um, and so I found that the demand for infinite banking was larger and more steady. And the other great thing about it too is that when I'm doing infinite banking, I can give away all the information for free. Whereas when I'm running an investment newsletter, I have to be careful how much information I'm giving out. Otherwise, there's no value for them to actually sign up for the newsletter. So you have to do this delicate balance of giving out enough information to establish credibility, right? And show them you have a strategy that works, but not so much that they feel, oh, okay, now I can do it myself, right? So in a certain sense, my first business, quote unquote, failed in the sense that I just kind of wound it down because at first it did well, but then after a while, infinite banking kind of took off. And again, I think most business owners who pretend like, oh yeah, I planned this all out, and yeah, and I had this strategy in place. Like, no, that's not how it works. You put yourself out there and you learn from experience and you figure it out, right? You figure it out
Mhm.
based on the feedback you get from your clients, which is oftentimes very surprising. Oftentimes it's counter to what you think is going to happen, right? But you don't know that until you really put yourself out there. And to your point, not just for a year, but for a long enough period of time where you actually have measurable results, right?
Absolutely.
So, in closing, Mark, is there anything you want to leave our audience with? Thoughts about your experience with Hazeltine? just thoughts in general about financial strategies and what people should be looking at.
Well, with regards to Hazeltine, I think that what I can say is that there's a lot of information to learn. There's like, for example, the infinite banking concept. Even with my experience and depth of experience, took me a little while to wrap my head around. And it's worth understanding fully and examining whether or not it's correct for you. With regards to anything to do with what I'm doing, if there is anyone out there that is hearing this, and I found this is often the case, they know somebody that is considering or has some sort of cross-border issue, whether it be investing or relocation, one way or the other, either south to north or north to south, they can feel free to reach out, and I'm happy to take a call and consult on those types of issues, whether or not it be cross-border business or relocation. And then also with regards to the storage thing, at this time, I'm not looking for any external investors, but if there is anyone so inclined to want to know more about that, I'd be happy to send them a copy of the electronic version of the book, and also add them to a newsletter that we send out through our company, which is called Paceline Investments, which would be pacelineinvestments.com. You can go there to see a little bit more information, all of that story. We'll just say there's a very good reason. There are several very good reasons that I've chosen to pursue that as the next leg in my journey, and I'm super excited about it. And if investing in metal boxes is something that has ever crossed anyone who's listening to this mind, then yeah, certainly reach out. Happy to have a conversation. And at some point,
the simpler and dumber the business model, the better.
Oh
right?
yeah, I mean, like,
Simple is good.
what people say, it's like watching paint dry. It's like we look for boring businesses. You really, it's hard to find a simpler, more boring business than renting a metal box for people to put things in. But you know what? You would not think driving down the street that those metal boxes represent some of the best investment opportunities in the country, and the truth is that they can.
Yeah. We'll include links below, so people who want to learn from Mark, work with Mark, talk to him. We'll include some information there. If you want to buy his book, you should, and you should read it. Yeah, speaking from my experiences in telecom, some of the best investors in telecom, it's just a lump of metal. It's called a cell phone tower, and they rent it out to Verizon, AT&T, T-Mobile, all these other carriers, right? That's a very profitable business model, and it's very simple, very dumb. You just buy the right real estate, you put up a tower, and you rent it out. That's it. And it's a very cash flow positive business model, and it's very simple and very low risk. I don't think the need for cell phone coverage is going away anytime soon. I don't think the need for internet is going away anytime soon either. Right?
Correct.
So, well, thank you so much for your time, Mark. We greatly appreciate it. Please get in touch with Mark. Please read his book. I hope you learn a lot from him. Best of luck to you with your endeavors, Mark. God bless you and your family.